Hey, what's up, y'all? Classic Kev back with another episode. Y'all, honestly, dude, it's really probably the most important episode yet because I got my boy Joshua Jake on here. And Josh, for people who don't know who you are, could you please just kind of introduce yourself, a little bit about your background?
Yeah, so dude, it's good to see you, man. Coming all the way from Arizona when we got to meet, which is really cool at NFT
Mhm.
AZ. But yeah, I'm Joshua Jake. I'm primarily a crypto content creator on TikTok. I've over the last 2 years started a company called Kryptonites. We're a multimedia marketing company. Now I just travel kind of the world and just US, and I'm definitely touching London and stuff later this year. But I focus on crypto education and breaking down macroeconomics and really diving into the overall tokenomics and everything behind a project and what actually makes it work. There's a lot of shadow shillers, so to speak, and people in the markets that may not actually understand what they're speaking on, and it misleads a lot of people in the industry. So I really try to focus on just facts, logic, and just the important thesis and macros behind all of these projects. That's who I am, and that's why I focus on my content.
Yeah, and y'all look, Josh does a phenomenal job. I follow a lot of his content. I mean, what you have like over 300,000 followers on TikTok right
Yeah,
now.
yeah.
And, guys, the way I met Josh was at NFTAZ. He was actually one of the speakers, which was the coolest thing in the world because very rarely do you go to a conference and you can actually chop it up with the speakers, after. And then coincidentally, on my way out of AZ, ran into him and Blockchain Boy at the airport. And yo, this is a true story. Blockchain Boy, I went to go pay for them. And Josh was like, no, Blockchain Boys got this. So like they would not let me pay for them. And Blockchain Boy bought us all, lunch at the airport. So it's just super cool. But man, like just from this talk we had in the airport, I was like, I got to get Josh on this channel because, what we're seeing in these markets right now, like this macro kind of, we don't really like to talk about politics, but like, what's going on with in China and what's going on with, Biden just passed the Inflation Reduction Act. I mean, there's just so many things happening right now, Josh. Like, where do you think this is going? Like, how do you feel like if you're in these markets? Like, are you comfortable right now? Or are you buying? Are you selling? What are you doing?
Yeah, I mean, I like to lead off with just scared money don't make money. So I'm comfortable in any market. I just like to understand the fundamental reasoning behind why markets are moving. So
Mhm.
obviously, it is scary times. We're coming out of the COVID-19 pandemic. Obviously, the WHO just announced monkeypox. There's always some issue from a macro standpoint. People are freaking out over the U.S. if we're in a recession or not a recession. And I know you like to say let's keep away from politics, but the reality is I am the same exact way, but we can talk about the facts and what's not and actually taking place in these markets. So for China, right now, what I'm kind of just focusing on over the next few months is we are currently in a pretty massive relief rally. We just saw the NASDAQ rise over 23%, confirming the first relief rally in this bearish downtrend past the dead cat bounces we've already had. But you have to take that into consideration. You have to realize what that means. That means we've seen 24% on the NASDAQ, 40% on Bitcoin, 110% on Ethereum without a single retracement. I mean, tiny little dips here and there as we move to new trading ranges, but we haven't actually had a retracement over the last few months at this point. So as an investor coming into these markets, I'm going to lead off with this and we'll just dive into macros. But you have to understand that there has been no retracement. You are buying a local peak. And all of these key issues and the reason why we are seeing disinflation take place from the economy were called out months ago, and that was the time to buy. June, July, we're a safer area. Now where we currently are, if you're currently entering the market, we're in a lot of uncertainty as we have a lot of these major macro events taking place. So we could start with China if you want.
Well, it's interesting you say that because, I'm just constantly DCA and into these markets, but I am like looking for that point of like, where should I take profits? But I understand exactly what you're saying. Like, we're kind of at that point where you've seen Polygon Matic, 3X and you've seen
I just sold all
Ethereum,
mine.
the run it's made. And it's like, is this rally going to continue? But then, when you look at the geopolitical aspect of what's going on in China right now, how much of an impact do you think that's going to have on these markets? Like I'm talking in the next 6 months of
Yeah.
what's going.
So for China, it's a very speculative market to kind of project where we're going to be heading in the next 6 months to the year. Because the reality is China's the second largest economy. So just like the US, anything that's going to happen or take place is going to happen at a very slow pace. Generally, a domino falling yes, it sounds quick, when speaking, but when it comes to reality, a domino takes 3 months to fall before it hits the next domino. And, it comes this prolonged issue. So for China right now, it comes down to something known as local government financial vehicles. These LFGVs are pretty much financial institutions, local banks that issued bonds and sold bonds in a bond market to artificially prop up their giant real estate bubble. So let me make that just basic for the audience and watching.
That was Evergrande. That was the Evergrande you're speaking of, because we remember this event months ago. So that's what you're talking about, though, right?
Exactly. Now, what's crazy and what people don't talk about is that Evergrande was like the 100th default. The first default took place back in 2014, then 2015, then 3 in 2016, and then so on, snowball, all the way up to where we're at with Evergrande today. The reason why Evergrande is so important is these pre-sales, the real estate market in China was solely propped up by these vehicles, which were being sold to investors with high yields. They were promising investors a bond that was backed by the governments. They were going to get a short-term maturity bond that would appreciate pretty significantly over 6 years because they were investing in infrastructure and investing it all into real estate. Fast forward, a decade from over the last decade to where we're at today, 225 million square feet of these properties, massive amount. I mean, we're talking city size, like construction is not finished and is underdeveloped. So there has been no cash flow. There has been no, nothing finished. Is that all these investors are paying off mortgages for properties that don't even exist yet. And since there's no cash flow and such an over amount of debt in the economy, there's only one option, and that is either they're going to print money to bail these corporations out of this debt, or we're going to see a lot of defaults take place on these loans.
You're telling me the builders took the pre-sale money, didn't finish the projects, and speculated, which I guess would work in an appreciating real estate market. That's a common practice even in the United States. But what happened is it didn't work, and now since they're defaulting. But what's scary is that how interconnected we are to China's economy through companies like BlackRock, that we have significant exposure to those developments. So I don't know what's going to happen. Like you said, it's dominoes falling, and like what part of the fall are we at right now?
So the part of the fall. So right now there's about 300 different Chinese companies that are being threatened to be taken off the NASDAQ, off the stock exchange. So we are going to be seeing a significant amount of Chinese stocks more or less be pulled off. And this is because of security issues from the SEC. China, because of these bonds, has lied extensively about hidden debts in their economy. Their central bank and their public debts that are known based off the reserves and the economists that we get to speak to are highly suppressed. They're not actually allowed to show any of the GDP growth from local sovereigns or from local provinces. They can't show the amount of debt accumulated from these LFGV vehicles that were created in 2008. And the reality is we're now stuck just trying to guess where when this default is going to occur on all these bonds. So for the US markets, where are we at and like how this transition over is simply going to be probably off manufacturing and demand. I mean, if we see these bonds actually default, this means we're going to see more than likely a collapse in the financial infrastructure from local provinces. So this means local institutions, local banks. We've already seen a few local banks freeze funds. There's been protests breaking out through a few different provinces.
We've seen
China.
The videos on Twitter. It's nuts. It's like nothing. If you haven't seen the videos, look up what he's talking about, y'all. It's nuts. It's nuts.
It's crazy. And so we know it's taking place. What we just don't know is how long they can tip this over. Like, for example, China or Beijing just released a $44 billion fund to help pay off some of these default loans. $44 billion in the grand scheme of things is nothing. This was to bring back consumer confidence as their last growth domestic product report came out negative. So this means they are heading into a recession. The housing market's on a decline. And where it gets crazy is the bonds that they were selling, these LFGV vehicles, these bonds they were selling to these investors, their credit ratings were extremely high risk. They were telling these investors that obviously, they're AAA ratings. They have, they're backed by the local government, but the reality is the default risks were much higher than they were telling their own investors. So you're getting those protests breaking out, right? These people don't want to pay mortgages on homes that don't exist, that aren't ever going to exist, that will never grow. Now these financial institutions, these real estate firms, and these construction companies and enterprises, also known as SOEs, they have no cash flow because they're not getting any of their payments. So they're going to default on the loans that are provided by the local banks. So that means their debt balances and everything are going to accrue. So this isn't necessarily something to be like, I mean, yes, it's kind of scary, but there is a way to profit off this. And this comes into really only one option. And it's, in my opinion, just China is going to have to print a hell of a lot of money, just a disgusting amount of money.
Yeah. And I guess for people watching this, and I'm kind of trying to wrap my head around it, Josh, how similar to this is what we went through in 2008? Because what I'm looking at, it's way worse. Like, it's not even comparable how much worse it is for their situation. So that's kind of what scares me being in these markets right now.
Yeah. So this is where I've tried reaching out. I've actually just reached out to a local enterprise in China. I'm hoping they email me back. We'll see what happens. Also, I might be flagged by the FBI now for doing that. Who knows? I don't know. I sent it. I was like, I need to talk to an economist out there that understands their bond market. But even if I do, they're not allowed to speak on it. They'll get banned from China.
Exactly. So, we don't know what kind of reports is really going on there because we just know what they let out.
Yeah. So coming back to, I want to touch on one thing and then we'll answer the question where you said, what was the question that you just asked me one more time?
Comparing this to what we went through in 2008 with our house and market collapse, there's a lot of stuff that's similar about it, but to me, this is a lot larger scale.
It's kind of the same thing. So synthetic CDOs, for people that don't know, in 2008 with the pre-blime or the sublime, what do you call it? Loans, everything we went through with Michael Burry predictions and all that from The Big Short. It's kind of very similar. At the end of the day, what was happening with these real estate companies?
He sold everything, right?
He just sold everything.
Okay.
Now he hasn't talked about these issues that I haven't seen yet, which again, I hope I'm wrong about this stuff, but the reality is these properties, these local banks were taking this money and they were taking half that capital, investing it into new properties before the traditional property was even over, so they can go raise more funding. And they would take that funding, take that half of that capital, sell more bonds and invest into new real estate, and then and just continue the process. So just literally a Ponzi scheme.
What could possibly go wrong?
Exactly. It worked for the first 4 or 5 years. China's economy was booming. Remember, everybody talking about how China's growth was going to overtake the US. But the reality is, it was all falsified information, and their debt was accruing over the last decade and a half.
So I guess, what most people are probably thinking, then it's no coincidence what's going on right now with the China, with talks of invasion into Taiwan. We all know about Nancy Pelosi's visit to Taiwan. She went to all those semiconductor manufacturers over there in Taiwan. So it seems to be that, if you're in a financial distress, China's communist, you seize the means of production. So is that what you think is going on in Taiwan, that they want to overtake Taiwan for that chip production?
It's a good question. I would, before we go all world's ending type scenarios, it's a definite, it's an option. So I dropped a video on TikTok where I even discussed that option. I primarily believe inflation will be the way to go, where they just print a mass amount of money. That would obviously be the first answer. Now, obviously though, with inflation, China's economy has a massive unemployment rate for their youth. It's up to 20% between the ages of 16 and 24. So as we see unemployment climbing, if we see defaults in loans taking place and more unemployment actually starting to spread as these major construction companies have to shut down, a lot of the infrastructure starts to collapse, the real estate market collapse, unemployment will inevitably go through the roof. So your labor productivity for growth in a nation is going to collapse. So an invasion to Taiwan over the next, 6 months, year, 2 years, whatever it decides to play out, there is reasoning into how that actually would benefit their economy, as it would bring back employment. It would increase that labor productivity. It would give an excuse for the large sums of inflation and money they're going to have to print to now fund the war. Right. So there is a lot of benefits into that factor for the Chinese government to kind of focus on that. However, I don't think wars in Southeast Asia and the Asia Pacific, I don't want to say that's going to be the first thing to take place. I wouldn't say that's a first domino to fall. It's not something I would rely on. However, in today's day and age, again, anything can happen. Now, speaking about the semiconductors, though, we did have the CHIPS Act actually take place. So this would come down to how badly China wants to hurt the U.S. economy. If they were to invade Taiwan, obviously your chip manufacturing from TSMC would shut down, which would cause major supply gluts throughout the United States.
That's the largest chip manufacturer in the world, right? TSMC. I believe they're one of the third largest.
Yeah. Yeah. They might be the first. I don't quote me on it, but I do think it might be the third largest. But even if it's not, it's one of the largest chip manufacturers, and it would cause it would cause inflation in the U.S. to start rising because people don't realize that's artificial intelligence, that's healthcare, that's pharmaceuticals, that's everything you think of has chips in it in today's day and age. So, however, it's a short-term impact that I think would, there's two, again, it's funny. All roads lead to more money printing. The Feds are in a very, very tight spot right now. They can't focus on quantitative easing. If they go towards quantitative easing, that would send us into a recession, 100%, a terrible recession. If they continue quantitative tightening, the U.S., unlike just domestic investors, they also have debt. We're $30 trillion in debt. So if they don't want to default, they're going to have to print money to pay for their inflated default. So all roads really just push towards, there has to be a large sum of money that is going to need to be printed in the short to near term as we transition from the supply chain in Taiwan to the United States, because we will have American made. I think we're really transitioning back to American made. I think people are thinking that the debt of the dollar is here. I think the dollar is going to become significantly stronger. I think it's going to become more of a sovereign nation again. You're going to see globalization kind of break up. China can't be a leading manufacturer. It's crippling other economies.
It's funny because I never thought like what you just said, but I have seen economists say that the dollar is actually, like, the more uncertainty we have, the dollar is actually going to get stronger as we kind of break up this type of, any type of conflict. But, what I think about is, like, what is Bitcoin's role in all of this? Because, when you see the bank runs, whether it be, Canada or, these bank runs, or even what happened in Afghanistan, where people had to flee their country, it's like, I'm thinking like, man, you did a video, dude, probably if y'all haven't watched Josh's video yet, it's on it. I believe it's pinned on your Twitter, where you break down how to set up a Ledger Nano X. And I don't think people realize, it's not a bad idea to have, a couple of G's of Bitcoin on a Ledger Nano X, especially if you live in a region with, uncertainty. So definitely.
So there's a few questions I think you asked. So we'll break that down from the top. So the first one was, we can talk about, so let's go. Let me try to think how we go in order with this. So
my bad.
No, you're good. Because I want to make sure we wrap up the conversations properly. So inflation. So the first one is going to be the US dollar, the strength of the US dollar, right? So I've been speaking for like 4 hours straight. So I'm
good, man. You're doing great. You're doing great.
Brain's a little mush. But so let's go back to the US dollar really quick, and then we'll transition to Ledger and Bitcoin. So for the US dollar, and that's a long-term provision, is where, like, yes, the dollar will get stronger. However, in the short term, that is going to cause a lot of money printing, right? To, fuel the economy, get the growth back in. We're going to have to pay for the manufacturers and everything to not be built in 4 to 5 years. We're going to need them in 2 to 3 years if that were to occur, right? So same thing with China. China's the second largest economy. So if they print a lot of money, that's going to crash the price of their yuan. And then you're going to see, obviously, a massive, what happens when anything ever inflates in price?
Assets go up,
right? So that is actually, in my opinion, that would be a bullish scenario for Bitcoin and whatnot. So focusing on Bitcoin, just in the next 6 months to a year, in the next 6 months, I am honestly incredibly bearish. I think over through September, October, I think we're going to have a major, the supply gluts are taking place. If you aren't caught up with the report that was released today from Walmart's earnings,
I'm not.
There is an inventory shock that's taking place. So something I've been discussing a lot is the inventory issues that have been occurring from the pandemic. There's something that actually Michael Burry is the reason why I even started looking into this. It's called the bullwhip effect. And it's where you have this massive demand from consumers, which we had from all these stimulus checks, right? They overordered. So the retailers had to overorder from the manufacturers, and the manufacturers had to overorder from the suppliers. The problem is by the time that supply gets back to the retailer, what happens? Well, we get major cargo supply shocks where cargo ships are sitting out for months and months and months and months in LA. And now that all those cargo ships, they have finally offloaded that inventory, and there is mass amount of inventories in warehouses. So we're going to see disinflation, which occurred for July. Everybody was happy. Went from 9.1 to 8.4%. August will probably have a pretty decent month. I'm probably expecting that 8.5%, 8.4%, maybe a little bit even further down. But we are going to come into the end of this year where all this inventory that's sitting on shelves with no demand is going to affect earnings reports from all these, these enterprises, these retailers and manufacturers. So those will be released towards the end of the year. So in the short term, again, I think we are more likely seeing a little bit of a relief rally. Like I mentioned in the beginning of the conversation, we need to see that retracement come back in. And that's where I'll be looking to make some key positions into the market. And then we can, and this transition straight into Bitcoin. So once those prices are back down just a little bit, and this is my personal opinion, not
financial advice.
As always,
I know it sounds a little like financial advice. I'm sure you guys, it is not.
Yeah. Personally, I am looking to see a bit of a retracement in the markets. And if data comes in and adjusts out of left field, that is something that we can't foresee. I'll touch on that. But where I see Bitcoin playing out is with CBDCs. I think, while we have 2023 might look a little bit of bearish and it's going to be hard to come out. I mean, these are big macro issues we're talking about. These can take place over 6 months to a year. But something you brought up earlier was BlackRock. BlackRock just integrated their financial private institutions, their institutional investors, the access through pretty much spot Bitcoin ETFs on a private basis. Now, in the short term, that is also, my opinion, bearish, because what that means is it's not public oriented yet. BlackRock are going to be your pretty much market makers. They are all a part of the G7 summit. They like to lead the way with ESG standards, and they're on the board for pretty much any major company you can think of. They own shares in any given company out there. So what that really tells me is more than likely they just released that. We're probably going to see a little bit of an accumulation period where, their private investors are going to get the best possible prices on Bitcoin versus the spot ETF when that is released in 2023, 2024 with legislation coming with the CBDC down the line. So that is in 2024 though. And I think we're still a little ways away from that.
That's interesting you bring that up. So guys, I want to circle back to that. So the spot, you guys can Google this. Multiple spot Bitcoin ETFs have been denied. But BlackRock has joined the server, and BlackRock is allowing its institutions to invest in a spot Bitcoin type of ETF, correct?
Yeah. So it's a trust. So it works very differently, but it's the same thing. BlackRock physically has to buy Bitcoin if they're institutional
and
investor.
I'm not happy that BlackRock's in, but I think we can see more manipulation. You could see a massive run up, with them basically announcing this. But then the other catalyst, that's why when you say you're bearish in the next 6 months, I worry about where does the Ethereum 2.0 merge kind of factor into this to you? Is this a catalyst that you're watching? Is this a buy the rumor, sell the news event?
Mm-hmm. Yeah, I would agree. Yeah, I think it's 100% by the rumor, sell the news. I've seen so many tokenomics where projects try to switch their tokenomics and reduce their supply. And this comes into, so there's two ways that goes into this. So just basic economics. So how does a price move? It's just supply and demand, right? So everybody believes that Ethereum, because of killing the supply into circulation is going to minimize by 90%. That's going to drive the price through the roof. Problem, in my opinion, that's only half the equation. You have to have the demand there. If you go on Fred or your economics from St. Louis or just, for the United States, personal savings rates are down to the lowest levels they've been since like 2008. Labor productivity is on the decline. So despite the fact that we have a strong job economy, we see all these positive job reports with your Democrats trying to flex that we're not in a recession, that we have a very strong underlying economy. It's because our consumers have a very bad spending habit. From the stimulus check, my opinion, the bull run was not propped up by the Bitcoin halving. In 2021, it wasn't the Bitcoin halving. That may have had an impact on the supply coming in, but where did the demand come from? If you take Bitcoin's chart for May 2021's bull run and you compare it to personal savings rates, it's an automatic overlap. That's because your consumers got your stimulus checks. They kept spending all that money. They were looking on high growth assets, trying to convert a lot of cash. And in April, after that stimulus check money died down, that is also when we had the crash and things escalated with China's miners shutting down. So there was a double sword effect there. So that is when we became an institutional market, yada, 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 saw a run up, and through November. But so where we're at today with Ethereum is that demand side. So yes, the supply is getting cut in half, but now consumers have zero capital in their savings accounts. They're having to work 2 jobs because they cannot afford inflation prices with goods and services in the United States. So my question to everybody that's bullish on Ethereum's merge, I am bullish long-term. I think it's going to be awesome for the ecosystem. So like 6 months, a year, wherever we head, I think that will be bullish. But in the short term, where's the demand going to come from in the next month?
Well, look, guys, that's nothing he said was controversial, because if you think about it, if we are in a recession, nobody's buying pictures of monkeys in a recession. Like, no, yeah. But the way I like to look at it is that, if you pick the right NFTs, if I know like if Ethereum does what you say it's going to do, we're going to run up to the merge news, then massively crash. That's what a lot of people are predicting. Well, people are going to lock some of those profits into NFTs, though, don't you think? If we're picking the right assets, would that be a strategy, or just sell?
Yeah. So, I mean, like I said, like I'll be looking to re-enter positions at those times. So like if Ethereum, just with Ethereum, you have to understand, like, just like Bitcoin rallied 40% in this relief rally, Ethereum's up 110%. So that's obviously off the Ethereum merge news, right? It broke through with open interest. For the first time in history, Ethereum has been traded more than Bitcoin. There's more volume, or not more volume, but there's more open interest. There's more leveraged traders on the market betting on the prices to go up. And I've taken polls on Twitter. It's like a 70-30 notion that people are bullish on the merge. So when I see that, I just look at overly leveraged traded position traders that are going to just get wrecked to the downside. And that's when I will buy my pictures of my monkeys. That's when I'll buy my pictures of penguins. That's when I'll be happily accumulating. I just sold all my Matic. I sold the majority of my trading positions. I've been swing trading now. Obviously, I have long-term positions that I won't sell that are for 5-year outlooks, but my trading portfolios are closed. We made over 100% profit on that Ethereum trade. We entered in at $10,050, like in the second week of June, when we saw disinflation taking place. So,
no, man, some seriously good moves, and I think that that's kind of going to be my plan, to start, aggressively taking profits. That's one thing I didn't do wrong. I've just been constantly accumulating, and, so on one hand, I'm enjoying these low price points, but I left a lot of money on the table through this last run, and I definitely don't want to do that again. So I'm looking at this merge, granted, I mean, are you hearing everything's going to go smooth, like no technical issues? I mean, I'm pretty sure that the beacon chains have run, everything's been smooth, correct?
Yeah. And the Gorley, I don't know how to say
I don't know how to say
it. The protocol, the test net. Yeah. There's just one thing I've learned from techs. Like I have advisors that have managed billions of dollars in tech funds in Florida that are helping, scale our company out here with Kryptonite. The one thing I've learned in this space is just like nothing in tech ever successfully launches. Let's look at it. Let's think from the opposite side, right? Because I like to play both sides. I like hearing all opinions. And I like I'm a sponge. I want to hear all the information out there. Let's look at your proof of work advocates. Are you familiar with that? Like there's a lot of proof of work advocates that don't think you should be switching from proof of work to Ethereum. So what happens to all those miners when they decide to, or all the people that want to stay on proof of work, where do they go once the merge actually takes place? Do they go to ETH Classic? Do they find a new chain? Do they fork?
I will tell you this, just coincidentally, the CEO of Hive Blockchain, I believe they're the largest miner of Ethereum on industrial scale. He was on this channel, and I basically asked him exactly what you just said. He doesn't seem too concerned, because I believe he said they're still going to mine Ethereum Classic, and that I guess he assumes that it's going to get delayed. I think that was kind of his response, but he doesn't.
That would be bad.
I don't know, but he didn't seem to. I mean, they're also mining Bitcoin, but he didn't seem too concerned, though. But it's a good question, because I know like Chainlink isn't gonna be compatible. So when you think about it, like in software terms, that something's not compatible with the older version. So like Chainlink and some other protocols won't be compatible with Ethereum Classic. So I don't know. I mean, if they want to fork their own chain, I mean, who says they can't build Ethereum Classic?
It's like. It's really not something I'm too like. That's not even the most concern I have for the actual merge taking place. Where the concern out of that comes from just emotions. Your markets are all social behavior. So what I would want to see on that release, as we see that build up to that release document, or to unless if they postpone, that's going to be all that overly speculated money is going to leave. Like they're just this is the last chance. They can't. They postponed like 4 times. So if that happens, I don't even want to see that happen. That would just suck. But
I think it's gonna go through. I don't think they're gonna delay it.
I don't think either. What I want to pay attention to more is like buy the rumor, sell the news, right? The news, when the news drops, like generally there's FUD. There's going to be FUD that comes out of any announcement that big. So that is what I'm kind of most focused on. And again, it's just all things tech. There's always issues once you just launch first. And even if they launch perfectly successfully, again, I don't know where that demand, which is what I really want to focus on, is going to come from just yet. I think we need to see savings rates and stuff from the general economy standpoint start to kick into gear.
Oh yeah, we have a lot of catalysts that's upcoming. I agree. I actually agree with you a lot. You've kind of talked me into that. I think we are in a kind of a relief rally, but we're gonna get bearish once this and I think that Ethereum 2 merger will definitely be one of the catalysts we look back on. Like, oh, we knew we should have sold, right here. But and guys, hey, look, if you made it this far in the video, man, drop me a 100 emoji in the comments, y'all. And Josh, dude, I know we covered a lot of things, man, but where can my audience find you? Like where's the what's your social medias?
Yeah, it's Joshua Jake on all socials. I got banned on Instagram, so don't go on Instagram. Just Twitter and TikTok's where you're gonna find me. We do have our Kryptonite Studio YouTube channel that is launching here in about 2 weeks. Nice. We have all of our sponsorships and everything going through. So now it's just a matter of lawyers at this point. But so that will be a full-time podcast with me and Blockchain Boy on YouTube, and then Discord. That's where I like to rely. So. And that's it, man. It's Joshua Jake. So you can check me out on any of those channels. But seriously, make sure you guys are giving this guy a smash the like button. If you guys like this content, it is crazy times. I'm glad to be here. Glad to have you on the show.
Yeah, man. I'm glad we finally got to do this. This was awesome. But hey, if y'all made this far in the video, thank you so much for watching. I'm Classic Kev. This is Joshua Jake, and I hope y'all got a lot of enjoyment out of this because I know I did.